So, right, let's get started. So, take what I've done is some little things before, but we started all over again. And this is an advanced class, so we'll be starting with market structure basis. But first of all, before we start talking about market structure, we need to first of all talk about the structure of a candle, or rather, let's talk about whatever we'll be doing this particular advanced class with them. So starting first, we started with market structure. There are just three main things that you need to know about in this advanced. Just three main things. So the first one being your market structure, the second one market mechanics, and the third one liquidity. Now, once you know these three things, you put them together, and from there on, you can start killing the market like a professional. So, with that being said, let's talk about market structure itself. Now, before we start talking about market structure, let's talk about the structure of a candle, first of all. For that, I will have to share my screen. Just a moment, I'm coming. All right. So first thing first, we begin with the structure of a candle. And for that, let me just explain a little daily candle. Uh, these are our candle usually. These are what we call two candlesticks. You know that. Now, to understand this candle, you need to first of all talk about the structure itself. A candle have four parts. All right, the four parts in the sense that in a bullish candle, this is what you most likely see. So in a bullish candle, this is what you most likely see. And from the look of it, this candle is basically divided into four parts, which is this top here, this place as well, this one underneath, and this one on the bottom. Now, this four division of the candle tells you everything you need to know, nothing else. All right, this one tells you everything you need to know. This is even more or less where the market structure actually started from. Right now, this candle, since it's a bullish candle, it have four structures. Even the bearish candle have four structures of it as well. The first one is the opening. The opening of the candle is the first place that now this candle represents time. All right, this candle they represent what? They represent time. Now, since for the daily time frame, each and every candle that you see here, they do what? They represent the day, what day. Take for instance, this one in particular is the candle of Friday 14th November. That means that whatever happened the price fluctuation on Friday, 14th November. This is what this particular candle here signifies. All right. Now, say this is a bearish candle. Okay, forget about that. Let's go with this sample here. Now, each and every candle we have an opening, first of all. That is why the daily time frame, that means that the start of the day should be where our candle to what to open from. Alright. Now, since this is a bullish candle, it means that the candle did what? It's open from the bottom here, which is this place here. Alright. Then after the opening, the next you want to see is the what? Is the close. Alright. Now, since this is a bullish candle, this thing will do what? It will close at the top. Right now, after this, apart from this opening and close, there is also two places that price will get to. All right, there will also be two places that price will get to before any, before anything will happen in the market, which is the highest point and the lowest point. So far, price is moving. There will be an highest point that price will get to, and there will also be a lowest point that price will get to for that particular asset. Now, in a bullish candle, goes same thing for the bearish as well. The rejection at the top, which is this week, this one is the week, all right? This is the week, while this fat one is the body. This one is the week as well, all right? So the top week, that is what we regard as the what? As the high, because it is the highest point that price did what got to before it was what rejected for that particular day. Why? The bottom week is the one that we regard as the what? As the low. Because it is the lowest point that price did what? Got to before it was what? Rejected for that particular day. Alright. So this is the four structures or for wherever of a candle. The first will be the opening. For the bullish candle, it's at the bottom. For the bearish candle, it opens at the top. Alright. Now, for the sake of my chart, my white candle signifies the bullish candle, and my blue candle signifies the bearish candle. All right. So the bearish candle opens at the top and closes at the bottom, while the bullish candle opens at the bottom and the what? And closes at the top. All right. After that, we have the other two this thing that usually is to form, which is the high at the what? At the low. All right. So with that said, that's what we have for the structure of a candle. So we will just move over to that, talking about tools of practical example and all that. That a time frame we use it to correspond with the daily time frame. Here will be the 5 minute time frame. We use the 5 minute time frame to check whatsoever happen in the what in the daily time frame. Now I will use this last candle here as an example. First of all, this is a what? This is a bullish candle, and since it's a bullish candle, that means that it will be opening at the bottom, then it will close at this place here. Then this is the highest point that price got to before it was rejected, and this is the lowest point that price got to before it was what? Before it was rejected. With that being said, let's check the 5 minute time frame and see whether we can arrive at all these places. Now let's see. That was on Monday, Nabi. So when did on Monday start? All right, so over here we have the starting of about the year. So you can say Monday started 0:15. That's 0.05. Let's check the candle. Candle in particular. So this was the candle in particular that particular day started from. At least you can say it's a bearish candle, so it will open at the what? At the top. Now let's see. Now, just so you know, it's not all exchanges that open at 12 o'clock. You know that we have different time zone. So that particular exchange can be 1 hour ahead or so, or probably 2 hours, or 1 hour behind, or 2 hours behind. So depend on whichever exchange you are using at the time listed. But I'm just using number one. We will confirm it if whether the market will open from there or not to know the particular one that this time frame this exchange is using. So this was the lowest point that price got to for that particular day before it was what? Before it was rejected. Now, this is the highest point that price got to for that day before it was what? Before it was rejected as well. Now let's check for the closing. The new day started around here. And that's a bullish candle, a bearish candle as well. So the opening will be at the top. This will then be the closing for that day. Now let's check to know which particular is okay. This one is different. Let's check when markets actually open. All right then. Seems like this market is 1 hour ahead, or rather the exchange. Okay, this is 1 o'clock. All right, 1 o'clock is a bearish candle. All right. Then for the closing will there be 59. Um, that should be 12. Okay, 1 o'clock, sorry. It's a bearish candle as well, so it will open at the top. So now let's check this one. And with that, you can see that we have arrived at our structure of the candle, which we have our opening here, we have our closing here, we have our high here, we have our low here. Excuse me. So now, with this being said, this is our structure of the candle, or rather the formation of the candle. This is how the candle forms. Excuse me. Now, if you notice, we identify 2 points of rejection. All right, we identify something known as the point of rejection, and I made mention of two, which is one, which is the high here, and the second one, which is the low here. So we're talking about this point of rejection just afterward. But first of all, let's talk about market structure. What is market structure? Now, market structure is basically the study of how price move. All right. Excuse me. Market structure is basically the study of how price move. It is more or less the structural approach. That means we want to study based on the structure it gives and all that. That's basically market structure. All right. And since we're dealing with the basis of market structure, we'll be talking about the most basic one, which is to talk about it, we have to use the concept of points of rejection, right? So with that being said, what are points of rejection? Now, points of rejection are levels in the market that price rejects. Take for instance, market is moving, but it got to a particular level, particular place in the market, and did what? And reverse from that particular place. By so doing, this particular level here is now regarded as a what? As a point of rejection. Something made price to reject that particular place. And that is why we regard such places as what? As points of rejection. Now, the same thing again have happened. This low here will now be regarded as what? This place here as a point of rejection, because market got to this particular place, price got to this particular place and did what? I was rejected. That's why we regard them as what? As points of rejections in the market. Now, to furthermore talk about points of rejection, like the two types of points of rejection we have in the market, we want to talk about the concept of PD, premium and discounts. All right. Premium and discount is just a way that we use in more or less, should I say, dividing the market or dividing our charts rather. Now, by including this middle line, I've done what? I've divided my charts into two. All right. I've done what? I've divided my chart into two. And this upper part, if you remember very well, if market, if price is at this upper part, it means that price is at what is at its highest. That means if an asset is being sold or bought at this particular level, it means that you are doing what? You are buying at an higher price. And when you buy at an higher price, higher than the amount that you used to buy that particular thing before, it means that you are doing what? You are buying at premium. That is why we regard this top part as what? As the premium zone. And whenever you are buying here, it's regarded as that you are buying at what? At a discount. Because when price at this side, price at what? Price at its lowest. And when you buy it at a lower price than the fixed amount or the amount you're supposed to buy it before, that means that you are doing what? You are buying at a discount. That's how we got the, should I say, the division of the chart itself, in which the upper part is the what? Is the premium zone, and the lower part is the what? Is the discount zone. All right. La, the point of rejection that is facing the previous zone is what we regard as the what? As the high. That's because market was going to the premium level, to the previous zone. Market was skyrocketing to the upside, to be at its highest. But what happened? It was rejected along the way. It was what? It was rejected along the way. They were giving us our what? Our points of rejection at this particular level. Now, this point of rejection that price has given us, which level is it facing? Remember, I said which level is it facing? I did not say which level is that point of rejection located. No. Which level is that point of rejection doing what is facing? Because take for instance now, we have another one here. All right, we have another one here. This one is not in the previous zone. All right, but this one is still the same thing, still facing the same direction with this previous one. So with that being said, this one in particular is the what? Is an high because it is facing the premium zone. This one here is an high as well because it is what? It is facing the previous zone. It does not have to be inside the previous zone, just facing the previous zone. A point of rejection that is facing the previous zone is what we regard as the what? As the high. While a point of rejection that is facing a discount zone is what we regard as the what? As the low. All these ones, they are facing the discount zone. Now, even this one here, this one in particular, is a low because it is facing the what? It is facing the discount zone. It is the lowest point. Price wanted to come over to this discount side. Price want to be like this particular market wanted to be sold at a lower price, but it was rejected. Regardless, the market wanted to be sold at a lower price, and that's why we regard it as a what? As a low. So the points of rejections that are facing the discount zone, they are what? They are lows, and the points of rejection that are facing the premium zone, they are what? They are highs. So this is an high, low, high, low, high, low, high, low, high, low, high. All right. So this is our this give us our what? Our basic market structure, which are the highs and the lows. This highs and lows is what you will see is the most basic thing you can ever identify in the market. It's what you will see at every given point in time. Be it the candlestick, take for instance, each and every candlestick that you see here, they all have highs and lows. High, low, high, low, high, low, high, low, high, low. So each and every candle, they all have highs and lows. The same thing when we move over to a more lower time frame, when it comes to structures, they all still have what highs and what and lows. So this level that price was rejecting, all this was their highs and lows. High, low, high, low, high, low, high, low. So this is how we can do what we can identify our basic market structure in the market, which are our highs and lows. Its job basically the level that price rejected, a point of rejection in the what in the market that will give you your what your highs and lows in the what in the market. All right. So let's see what we'll look into is that's a best I'm coming. Let's see what we'll look into is the subcomponents of the basic market structure that we just discussed. All right. Now, with that low our highs and lows usually is to form. So let's move over to talk about the various subcomponents of them that we have in the market. So excuse me, let's get started. Now, to talk about this, I'll be making use of the concept of just a walk little crazy concept like that of higher and lower. All right. Now, what do we use this concept for? This concept of higher and lower, what do we use it for? We use this concept in doing what? In differentiating two structures. Remember, we now have our two basic structural level in the market, which are our highs and lows. So now, how do we differentiate two highs and how do we differentiate two lows? We make use of this concept in differentiating between highs and lows in the market, which is the concept of higher and lower, in which an high can either be what? Can either be higher or lower than the other high, or a low can either be higher or lower than the other low. All right. Now, to apply this, we want to make use of your focus is based on the recent price action. I will come again. Your focus is based on the what? Is based on the recent price action. With that being said, take for instance, over here we have two eyes. We have an eye here. And we have another eye here. So these are the two major eyes that we have in the market as of now. Now, how can we differentiate between these two eyes? How can we do what? How can we differentiate between these two eyes? That's where the concept of the higher and lower comes in which one eye, remember, we focus one of the criteria for this concept that you want to focus on from the most recent to the past. All right, from the most recent to the past. You are not coming from this way, no, you are coming from this way. The difference between this most recent one and the past one, that's what you want to look. You don't want to look into the difference between this past one and the most recent one. No, we don't want to do that. We want to look into the difference between this most recent one and this one and the past one. All right. So with that being said, between these two eyes, you will see that this other eye, this eye is higher than this one. You see that what? You see that this eye here is higher than the previous one. And with that said, we now have our what? Our higher eye. All right. So this is just basically how we can do what? How we can differentiate between eyes in the market. Now, okay, this is another case study here. We have an eye here. We have another eye here. But what differentiates between these two highs? Remember, we are doing what? We are coming from the most recent to the past. This high here is the most recent one in between these two highs. All right. Now, what is the difference between these two highs? This one, this high here, is lower than this previous high. I will come again. This high here, this most recent one, is what? Is lower. You can see the level of this previous high. This is the level. This one fails to break above that particular level. So this particular high here is lower than this previous one, thereby giving us the second classification of high, which is the lower high. Remember, the other one is regarded to be the higher high because it was higher than the previous one. But this one is regarded to be the what? The lower high because it is lower than the previous high. All right, so that's for that. Now, when it comes to low, the same thing as well. I just have to turn off this magnet for now. Now, using these two low as case study, you can see that this second low is what? Is lower than the previous low. You can see that it broke below the previous low, so it is lower than the previous low, thereby giving us our what? Our first sub-classification of low, which is the lower low. All right. You see, I've been on the downtrend lately, so it will be hard to see an higher low. But regardless, we will still see something. All right, let me just use this one for example. Now, over here, we have two lows. This is the first one, and this is the second one. All right, it's not a well-defined low though, but for the sake of this class, because BTC is already in the downtrend, so it will be hard to see a what? An higher low. So now, if you check this previous low and this low, you can see that this low in particular is higher than this previous low. It failed to break below this previous low. And because this low failed to break below this previous low, thereby giving us the formation of the what? Of an higher low, which is the second sub category or classification of what? Of lows. So this is how we can subcategorize the basic market structures that we have, in which we have the what? We have the higher highs, we have the higher lows, we have the lower highs, and we do what? And we have the lower lows based on concepts of higher and lower. All right. So that will be all for now for this particular session. In the next session, we'll talk about trade. All right. Then from trade, we'll talk about complex market mechanics, market structure. Which we'll talk about the reconstructions and all that. But for now, we end here. So over to you guys. Any question?
Still need to go through it. Then, by going through it, I'll ask questions.
You said?
No, from what you explained, I'll still need to go through it.
All right. So,
Well, sorry, I want to ask a question.
yeah, go on.
I didn't get the last. I didn't get the last lower high that you classify under that lower classification. That last part of it now, like this one that you just finished,
The one that I showed you, the
whereby we
last one,
have two lows.
that was a lower low. That was an higher low, not a lower high.
The one that we have two lows, but the previous low is higher than the recent low.
That make
Or
it
what did you
an
classify?
higher low.
That
You
makes
just
it a
said it.
higher low. Yes, here now. Here now, yes.
You just
This
said it that this most recent low is what is higher than the previous one. You just said it. With that being said, since this one
okay,
is higher than this previous one, then this most recent low is what? It's an higher low because it's higher than the previous one.
okay, okay.
All right. Anybody have another question regarding this particular distance? Okay, for those of you that are still having a little bit of issues with it, just go through the recording again, all right? Then we understand everything better. So we'll meet during the next class.
Thank you so much, sir.
Thank you, sir.
Thank you, sir.